All right, guys, ready to go?
We're ready.
Excellent. Let's go have some fun. Well, welcome everyone. Boston Fintech Week, and what's that day 4 or day 3, I guess, depending upon whether you guys attended the sessions on Monday. So I'm delighted to moderate the session today, which is called Blockchain Reshaping Capital Markets: The Impact of Blockchain in Capital Markets, including Digital Securities. We're going to have a fantastic discussion next 50 minutes or so. We'll try to take questions as they're coming in on the right-hand side of our panel here. Let me introduce our esteemed panelists. It's my honor to moderate the session very quickly. I'm Dushyant Charawat. They just go by D. I'm investment banker at Rosenblatt Securities. We are a New York Stock Exchange listed broker-dealer, in fact, the largest broker-dealer on the New York Stock Exchange. And as a banker, I've focused on the fintech space for the last 15, 20 years. Joining us today are 4 amazing speakers. Shari Noonan is the co-founder and CEO of Rialto Markets, which is a global leader in the blockchain space. We've got Erin Sheehan, who is Vice President of Sales from Securities, another tremendous powerhouse in the blockchain space. We've got Dan Raju, who is the CEO of Tradier, which is a company that straddles both the traditional space and increasingly the blockchain crypto space. So look forward to Dan's comments about bridging the traditional markets with all of this blockchain stuff that we're talking about today. And then last but not the least, we've got Corey Pugh, who's the CEO for Bridge Tower Capital, which is a fantastic amalgamation of part investment company, DeFi platform, and a lot of other things that hopefully Corey will describe. So let me welcome all our panelists and open up with asking Erin, in 2 minutes or less, tell us, Erin, about one key thing that you think kind of you're looking at or approaching the entire blockchain space from Securities perspective. Not necessarily what Securities does. We'll get into that later. But just, opening comment about what is the 1 or 2 important things that you guys are working on.
Sure. Thank you so much for the kind introduction, Dee. It's a pleasure to be here. What we're finding is the most pressing issue that Securities is solving for is really the accessibility and liquidity in the private marketplace. We're seeing private capital markets increase at a tremendous pace. If we look at data, $3 trillion was raised in private capital markets in 2008, and fast forward to 2017, we're close to $8 to $9 trillion, and it's actually forecasted to be $14 trillion in 2023. So meanwhile, we're seeing the public markets shrink by about 50% over the past 20 years. And private capital markets accessibility is not really caught up with the demand or the supply, rather. So up until recently, it's been really poorly digitalized, it's been fragmented, and there's just really high barriers to entry. So, if you really start to kind of take a look at the liquidity stats, private capital funding's been twice the size of the public capital raise, yet I read a stat that it's 330 times less liquid than the public marketplace. So to be more specific, public capital markets has raised 1.4 trillion and enjoy 33 trillion annualized trading volume versus the private markets that see just under 3 trillion cap raise, yet only $800 billion in trading revenue. So as we all know, the reason for the increase in the private space is that issuers are delaying their IPOs. The issue is that is where the IPOs is where investors used to be able to capture their growth. But what's happening now is that wealth is being created in the private capital markets as opposed to the public markets. Now that companies are waiting to go public longer, and now there's little participation in the public with the retail investors. It's very opaque. There's little to no liquidity, and it's really difficult to access. So then the question becomes, how can we make the private markets more accessible and efficient for the public? We believe that accessibility and liquidity go hand in hand. So if you have accessibility in the cap raising side, but not the liquidity in the secondary, you haven't fully solved the problem. And it's still really difficult to invest. So someone like myself, if I want to invest in the private markets, let's say I have access to the capital raise, but I have tuition payments coming up, or you may have a home to buy or unexpected life event, that liquidity piece is still a critical element. So without both the accessibility and the liquidity, investors are really shut out, especially the retail investors. So it's not good for the health of the economy or the democratization of our economy. And, just to further on that, the additional pressing element is that as this segment grows, both the private as well as the specifically digital, it becomes kind of fiscally irresponsible, or investors are just kind of disadvantaged if they don't have access and they don't have exposure in their portfolio. So as this relates to blockchain, this is where we think things can really start to become solved. You'll have a new effective tool to solve for this inefficiencies in the private market. And that's what Securitize is looking to do.
Terrific. Love to find out more in the conversation. Shari, do you want to go ahead and next and provide us an opening statement of what do you find most interesting and maybe a soft way of introducing Rialto?
Absolutely. So I'm so glad that I got to go right next to Aaron because we were very complementary in terms of what we do. So we really utilize blockchain to build the infrastructure for the private markets in much the same way, but in a complementary way to Securitize. It reminds me a lot of the equities markets back in the 90s, building that infrastructure out. We're doing it, again, institutional strength and retail scale, so directly to the retail market. And we're working across private markets in conjunction with issuers to really allow them to raise capital directly from retail constituencies via these new regulations. And that is enabled by hooking up with transfer agents that have taken on blockchain-based protocols, which allows smaller raises to be done in a cost-efficient manner. So that's really where we're leveraging blockchain. We also are working with Regulation D in the smart contract world, leveraging blockchain. So that at a high level is how we're really looking to do it. But again, private markets, seeing the explosion in that and building the infrastructure using blockchain as the backbone.
Terrific. Dan, why don't you go next? Tell us about your perspective. And again, as I said in my opening comments, love to have you bridge the gap between the traditional space. Today, it seems like the gap between the traditional space and all this blockchain crypto stuff you're talking about. Eventually, both are going to meld over time, but today it definitely seems two distinct worlds. So love to hear from you.
Oh, thanks for having me, Dee. Thanks for the Boston Fintech to host this event. Happy to be a part of it. I mean, as you know, for those of you who know Tradier, we are in the business of basically enabling investing through hundreds of platforms globally. So we fall smack in the center of both being impacted by blockchain and trying to be a part of how we leverage that at the same time. So we have this unique perspective as a regulated entity to try to navigate through the benefits at the same time, having to work through the change in the landscape all at the same time. So this is my general take on it, right? We just purely in the world that I live in, the way trades are initiated, the way trades are executed and custody is all going to change, right? And the question really is, how can we all be a part of that, driving that value for the retail, in my case, the retail customer, for customers in general. So I think what's a point of great interest for me right now is, we are right now just at the verge of, offering hundreds of companies that are connected to us crypto trading, right? So that's an offset of the blockchain initiation that has occurred. At the same time, we are trying to grapple with the way we actually go ahead and do all the essential components, KYC, AML, trades, the way we process the trades, the way we custody, clearing, settlement. All that is fundamentally up for amazing amount of what we call innovation, and blockchain seems to be at the heart of it. I think it is basic all the way, if you can talk about, real-time regulation to all the way up to, T+0 settlements. I think that entire stack is up for grabs. And I think so that gives us an amazing opportunity to try to work in a regulated world, in that changing landscape. So this is a point of great interest for us as a company. We are already impacted with the fact of what are the kind of securities we make available to our customers. But at the same time, I think we are trying to grapple with how can we pick and choose where we start and drive the best value for the customers using blockchain. So happy to be a part of the panel. I'm sure I can add a different perspective than others do, but I'm happy to be part of the panel.
Great, thanks, Dan. Corey, let me pass it over to you.
Thanks, appreciate it. It's great to be here. For us, we are a hybrid. not only do we invest in companies, but we also have products that we put out. So we had kind of a dual angle, which has been interesting for us. So, really the two things that I'm seeing is, similar to what Dan was saying, how do you take the traditional markets and bridge them into the digital asset ecosystem? And really the underlying premise for us, or the focus, is on the blockchain. And I think the blockchain, we talk about it from the financial markets, but the enterprise side is also extremely important. So you've got businesses needing blockchain, you've got opportunities to work on processes, systems, and then the financial side of things, obviously, as we look at creative products to bring into the mix. So those are really the two angles that we look at there. The other one is the global opportunity. And, this is an emerging market. So you need these partnerships. And so we try to get out, we try to network, interact. One, we want to look for companies to invest in. And then two, you really need those companies and those partnerships to figure out, we opened up an office in Switzerland. Well, the jurisdictional rules are a little different than we have in the US. Then we're opening up Singapore. Now you've got a little different here, and then we go to Brazil. And so, you've got this whole ecosystem you're trying to put together. So the regulatory aspects of that on a global basis, the partnerships really help vet those out. Very, very pleasantly surprised how open people are. And I think that's really the way it works. I mean, on the panel, we work with, these groups too, on this outside of this. So, and then the last one is what products are going to stick, what are needed. We have a lot of theories, we have a lot of ideas. And so you kind of have to put some things out there and you test it, and then you pivot and navigate. So, being flexible enough to see what the market and what the customers really want is also critical for us.
Terrific. Well, one framework to kind of approach this discussion is to just take the traditional life cycle of a trade that we're all very familiar with, right? Pre-trade, trade, and post-trade, and just parse out the ways that blockchain, crypto, DeFi, all of these concepts overall tend to impact the entire trade life cycle in terms of where are the opportunities, net new opportunities, where there might be disruption, opportunities to improve the current environment, opportunities to add new products where the traditional markets were not able to provide products, or where retail investors in particular were shut out of certain parts of the market. For example, we talked about private securities that both Shari and Aaron talked about. So first question of the panel is, and maybe we can ask Shari to lead us off, tell us in the pre-trade part of the process, right? So where manufacturing a product happens, how can we think about blockchain and the opportunity blockchain provides to create new types of products or new versions of old products that if we can bring out to the market, both through retail or institutional investors? So we'll start off with talking about product creation, and then we'll sort of talk about other front office issues as well. And as the discussion progresses, we'll get into execution and talk about post-trade activities as well. So Shari, in the pre-trade, tell us what's happening, lay of the land, and what's the opportunity for blockchain?
Absolutely. So in pre-trade, I think there's a lot of opportunity, specifically in the construct. So in terms of being able to construct securities and handle a lot of the elements of that are traditionally either paper-based or dealt with in the middle office or further down in the value chain, right? Traditionally, my background's traditional capital markets, and when you're sort of in the machine, everything's very bifurcated, and that's one of the issues, right? All the systems sort of begin at one point and end at another point. It's not as if the origination systems talk to the middle office systems of the trading desk. So that being able to construct a product that can start that thread that works all the way through a trade life cycle is immensely beneficial. One specific use case that we're working on is on funds. So working in funds and being able to construct securities that take some of the heavy lifting out around how you can digitize and fractionalize these funds and what needs to be considered from either trigger elements or other corporate action elements upfront as you structure them. So that's really where we're working in the pre-trade. I would really think about it, frame it from our perspective in what's the structuring look like? What does the construct look like?
Okay. Who'd like to go next? Erin, you want to talk about sort of potential opportunities in the front office? Erin, I think you're on mute.
Yeah, no, thank you. No, Shari did a really great job. I think the smart contracts is really where, from kind of the pre-trade standpoint is really where it becomes really transformative, because, you can put all the transfer restrictions, compliance rules, all these things that, traditionally would create kind of friction in going back and forth and making sure that everything tied out in the traditional markets. Here, where you're able in the digital space and you're able to put everything on a smart contract, this is all happening immediate, right? So before the trade even happens, while the token is being created, you've got these smart contracts that stay with it the life of the token that will always be and immediately be providing this information about how this token can and can't be transferred. And to that end, it creates a very transformational solution.
Dan?
No, I think both Erin and Shari covered a good chunk of it. See, this is the way I think about it, and some of it comes from the context of what we do. But I think there's quite a bit of innovation possible that is on the pre-trade side as to how do you, from a user experience perspective, make the public and the private securities available through a common experience. I think that is, a big chunk of. We keep on talking, there's so much conversation about some of these tokenized assets. There's still nowhere compared to the volume that we see here. But the reality is, I think the product has just not been introduced yet to the actual retail crux of the customer. So I think there's quite a bit of innovation possible on how we deliver and make this product available on a pre-trade basis on that segment, right? In addition to that, I think there's quite a bit of possibility in the areas that will only enhance the product on the pre-trade side. And that is, I think the KYC component that currently happens it's kind of interesting. It's kind of fragmented and centralized at the same times and creates a lot of unnecessary processes around it. So I think that can change. And I think, and the other thing that's possible, and it helps the regulatory conversation, is there's quite a bit of innovation that's possible on real-time KYC, right? Real-time KYC, real-time verification, and real-time risk management that kind of reduces the pressure on the rest of the chain. So I think those are areas for me are of tremendous interest, is how do you productize those assets in a way that reaches a larger retail market, and most important, and when you touch retail, it's always going to be about how do you remove friction and simplicity. And I think the real-time aspects of that KYC and verifications have a huge scope of improvement there.
Okay. Let me just, since Dan and Erin, you guys raised the issue of a token, and 5 of us on this call, we probably spend more time on this space than other people. But in the interest of a lot of other people that may be less aware and fully aware of these terms, let's any one of you just talk about the concept of tokenization. What it is meant. I mean, we began with looking at, the first time I think I came across tokenization was many years ago when we started talking about ICOs and STOs. And there was a big craze back in 2018-19. And then, suddenly it sort of died down in 2020, right? And there are sort of, very few STOs and ICOs happening. And then they're tokenized versions of traditional securities. So can one of you just, for the audience, explain what tokenization means and what are the different manifestations of the concept of tokenization? Corey, you want to start us off on that?
I'd love to. So I think, we're starting to get a little more definition on terms. And, you hear token, you hear security, you hear tokenization, utility tokens, et cetera, et cetera. No, I think the two where you have to start is what is a security and what is a utility token. And that's really what you see the SEC and all the groups trying to decide, all right, well, securities have been around for years and years. I mean, securities laws are not necessarily new. A utility token is relatively new. And so where we came in, and actually it was props to Securitize. It was them, honestly, Jamie, Finn, and the group that helped us understand, look, a security is something that you have to treat in a way that is regulated. The KYC that Dan talks about, the accredited investor checks, who's going to do that? You can't just go out and solicit capital from a company or from an individual without understanding what those securities represent. You talk about utility tokens, and this is more in maybe the cryptocurrency worlds, though there's some debate there as well. A utility token, is open in theory to retail, and it can be traded freely. And also we now have getting into some regulated exchanges, and liquidity, Aaron talks about, is critically important. So securities, utility tokens, understanding the difference to me is the first part. Then you start talking about tokenization, and tokenization has a myriad of opportunities. And to me, that's really a concept that, tokenization is you fractionalize an asset. An asset can be art. An asset can be anything that has value. So once you do that, you now can have multiple people participate, like in a private equity firm. Another group we came from had 2 billion assets under management. There's not a lot of people that are going to write $400 million checks. Now you open it up and you tokenize it, you now can reduce the minimum entry to say 50,000, 100,000, 150,000. You've opened up an opportunity to participate in something that otherwise, you wouldn't have. And then you have the opportunity, as Aaron talked about, and I think it's a big deal, is liquidity. You keep hearing the concept of liquidity. Well, there's also rules for liquidity. Securities have certain rules that you have to follow. Utility tokens have different things. You have secondary markets opening up, and you have primary markets opening up. And so I think that liquidity is kind of the back end piece here that this industry is evolving to and defining. So, I could go on forever on the term, so I'm going to be quiet for a minute, but I think those are kind of the fundamentals that you have to deal with.
No, that's extremely helpful, Corey. So I think the clarification first of all, the distinction you drew between, a token and a security token versus a utility token, I think that's critically important. And that's where a lot of the regulatory issues are. I was reading the back and forth between Gary Gensler, the SEC chairman, and the Coinbase team, right? Brian Armstrong and the CFO, over Twitter, right? And the Coinbase team basically saying that we are applying, 1930s regulation to technology and new structures that is incompatible. So we, in many ways, regulators need to rethink that structure. And it's ironical that you've got Gary Gensler, who taught 3 years a blockchain course at MIT, now at the helm. So, he definitely understands that space well enough. So I think that distinction is being currently, battled with by regulators, the highest levels, and we are still not clear. How do we sort of, fit that 1930s regulation into these new products that are here today? But I wanted to just press on, in fact, to the rest of the panel here. Anything else you want to add, just to lay the land of how do we think about tokenization or blockchain-based assets, whether they are securities, whether it's art, whether it's private equity, whether it's NFT, which is digital art, any aspects of that? Let's spend a few minutes talking about that, because I think it's important.
So we actually think about it from a macro view of two different perspectives. So we first look at the regulatory perspective and we say, what's the product? And we only deal with securities. So if it's not a security, we're not gonna touch it. But what exemptions under the securities laws, is it availing itself under or being offered under? And then so it's sort of what sort of security is it? And then what's the form? And so to me, it's sort of, putting another analogy to it, are you listening to the Rolling Stones or the Beatles? And are you listening to them on an MP3 or vinyl? And, if you're listening to them on vinyl, that's going to, have inherently different characteristics to it in terms of its portability, in terms of what you can do with it. So once you adopt the digital form, and I know I said MP3 sort of tongue in cheek, but once you adopt the digital form, then there's a lot of other functionality that you can be overlaid on top of that. So there's a lot you can do with that music that you can't do with vinyl, right? And so that's, to me, the concept. And Gary's, Mr. Gensler, the commissioner, is a very smart person and understands this. So I think, but to me, it's, the securities definition and what is a security and defining that, and then what's the form, and it's just a technological upgrade at that point. And what do you do with that technological upgrade?
So Shari, I love that analogy you took from the music world. So tell us, can you take a traditional asset, because obviously Rialto just works with securities, we get that. Take a traditional asset. Let's take a stock, right? A share of stock in Tesla. And can you sort of describe what tokenization of that share of Tesla stock might mean? Because I think that'll help people sort of put a finer point on it. Like, describe, we are all used to buying a fractional share in Tesla, let's say, in the traditional space. Now, when you port it over and have a tokenized version of it, what more can we do with that?
So absolutely. So I think, at the very base layer, and I think sometimes people gloss over this, but at the very base layer, you get operational efficiencies. My biggest errors when I was a sales trader came from corporate actions gone wrong, dates that were missed, in terms of rollovers of options expiry and things like that. So at the very base layer, it's there are automated triggers around dividend payments. All of that efficiency is built in to the security. So you're eliminating a lot of touch points, a lot of movements along that security life cycle. And to me, that's massive, but it's not sexy. So no one wants to really talk about it. That's not the sexy part, but it's massive in terms of the evolution of the technological upgrade. Then you've got the ability, and this is sort of the fractionalization of everything that Corey was talking about, where you can take things that haven't traditionally been wrapped because it's either been too expensive to do it or too difficult to do it. You can wrap things and slice them up: art, cars, venture capital pools, and you can then represent those things and put the construct around them, and it's cost effective to do that and represent it in digital form and distribute it out to masses in a cost effective form. And to me, that's changing the dynamic in terms of how capital markets can be accessed, and how, it changes fundamentally how people are going to access capital markets and how portfolios are going to be constructed.
Great. Corey, anything you want to add to that?
Maybe a couple. You did. I'm sure you nailed it. I think you got exactly the premise of it. But maybe an example for us. You take traditional financial instruments, and now we come over to this digital space, and it is about the blockchain. I mean, this is software that is changing and revolutionizing multiple aspects. You go back several years, and it's the internet. It's the early days of the internet coming in, and everybody going, I don't know, regulators trying to figure it out, and a few companies saying, look, we're bullish, let's go. We're right there, but I don't think you can ever forget that the blockchain is what's making a lot of this, or all of this, happen. So start right there. With the blockchain, you have some pretty neat opportunities. So DeFi, we hear this word DeFi a lot. I'm excited about DeFi. It's got a lot of opportunities where you can take some traditional products and, you talk about pairing and wrapping things together. I own some algo. We happen to like algo, right? So we own some algo, and we stake that on a node, and I'm getting probably way too deep here. And then I have, we like Avalanche. So I've got some AVAX. So I own these tokens. Well, what can I do with them? I can trade them. Well, can I pair them? Can I link them? I've got some ETH, Ethereum, and I want to put Ethereum in here with algo, and I want to create a pair. Now, we call that a security in our world too, because we kind of go the safe route. So now, all right, who's going to do all that? Well, thank you, transfer agents and lawyers and smart financial people. We put that together, and now you offer a very traditional concept of investing in a financial product in a digital ecosystem, with really an opportunity now to open it up. And the speed is absolutely it. I mean, you're trading 24/7. This doesn't stop. So, traders, the Forex traders, good luck. I mean, you wake up at this hour and you wake up at this hour. If you're trading in this space, you don't sleep. You're on. And so that opportunity to go continuously is pretty amazing too. So we're seeing that confluence, the convergence. It's exciting. It creates opportunities to put things of value together in a compliant way. And you've got groups that know how to do it. You put the groups together and you have a really great opportunity to put, there's billions of dollars right now. Pick the number. I heard 100 billion last time in DeFi. It's not bad. There's some big institutions that are coming in.
Yeah. Dan, from your perspective, tell us about when you think about tokenization and the whole sort of, value chain. What are interesting aspects of that you guys are seeing or working on?
No, see, if for all of you, for just saying one thing about what we do, we have built a business largely around saying, hey, the last mile can innovate without having to worry about regulation and complexities of the market. So in a way, we call it, we build a business around, we power hundreds of companies at this time, right? Both the advisory, global, neobanks, and also a lot of active trading platforms. That kind of gives us a perspective of how investors behave centrally across all these platforms. I have a very interesting perspective. I actually think some part of the conversation that needs to be had first in this market is I think we tend to talk about regulation. I think the conversation that's very interesting to me is a conversation needs to be had. How do you enable regulation using blockchain? I think that that's the conversation that's not being had. The conversation is being had as though, there's a noise chamber A and the noise chamber B, and some of us trying to bridge that noise chamber, and it'll never happen, right? It'll happen in a very, very Twitter way, like it more recently happened, right? So I think the conversation that needs to be had is, and so there's these tremendous areas where blockchain actually enables regulation. See, if I'm a regulator, I'm thinking about one thing, and that is, how can I centrally hold someone accountable for a process? And whether it is, trade, pre-trade controls, post-trade controls, custody, execution, KYC, AML, OFAC, whatever you want to call it, right? And I think the conversation that I find it very interesting to have is, how can blockchain enable that amount of transparency that the regulators need? I think if we can define the changes that are occurring in terms of how can enable innovation, I think it changes quite a bit of that. I think so. That's for me quite a bit of interest that I think we are trying to think about internally, in the sense as we try to adopt these tokenized securities and all these, at the same time, a whole bunch of crypto assets, is how do you deliver the regulators the same amount of transparency and controls, right? They fundamentally need, and as we are changing this technology, I think it is sometimes being positioned as, it's a redraw of the whole stack, and that gets everyone. So that's one aspect that's of tremendous interest for me, number one. Number two is, I think for me, the efficiencies that blockchain will bring, right? Particularly where it touches customer settlement time, trade settlement time, and particularly around how quickly we can actually make some of the data that customers can make better decisions available directly to them. I think those are areas for me, both enable blockchain that will basically of tremendous interest. So 3 areas, if you ask me, is I try to reconstruct the conversation around enablement of regulation rather than, how do you have regulators regulate this field? I think it's a ground up way of looking at it. And obviously everything that's, innovation around customer and client experience. So.
Can I? Sorry, I'm
go ahead.
Because those are really key aspects, and Aaron can probably answer this better than I will, or speak to it better than I will. That the one thing, the premise of the blockchain is it's open, it's transparent, right? I mean, when we stake, you can go see it. It's there. It's a record that anybody can go access, and you can see what we're doing. So I think it's beholden upon companies too. The regulators one-on-one, they want to protect investors. And they want to make sure they know what they're getting into. You also want to protect companies and educate them, because, we're all still kind of navigating this too. But I think more transparency, more ability to say, look, here's what we want to do. Here's what we're doing. is this an opportunity to do it? Open it up. Now you expose yourself a little bit because you're going to ask a lot of dumb questions, which frankly I'm okay with. So, but being open enough to ask those questions and, share what you're doing, open up what you're doing, that's the only way you get discovery. And I think it's when we start hiding things and doing things behind the scenes, what are the regulators supposed to do? No, now we've got to dig. We've got to have all these different kinds of, call them on Twitter, go to the courtroom, wherever you want to go. So I think that's number one. And then number two is you have to be educated and you have to study and you have to be patient. And a lot of companies and a lot of groups are not patient enough to navigate this space and learn about it and invest wisely. Take your time and understand it. You've got staying power as a company. That's a huge benefit. And so I think being patient, understanding that you're going to have to pivot is key too.
Yeah, I think transparency that you just highlighted is so huge in the space. I mean, I've been working at various ATSs for the past 20 years. I just aged myself, but I saw continuously over the years the continuous need for additional transparency that the regulators were looking for that was really difficult to deliver. First of all, because we didn't necessarily have the systems to deliver the amount of transparency that they were looking for. And we're in a place where as we're building out this ecosystem, we have the tool to provide the very transparency that should make it should make this entire ecosystem be very kind of regulator friendly at some point, if that makes any sense. I think transparency is the piece that was such a struggle in the traditional finance world, and the fact that we can provide it via blockchain right now is really powerful.
Well, we've got a couple of questions coming in. So one that I'd like to take is from Jeff Glass, who runs a company called HomeTap right here in Boston, which is in the real estate space. So Jeff's question is, can our panel give some tactical advice on how a company that today raises traditional private capital, what steps should they take to explore, benefiting from a digitized security via blockchain? So the context is, in HomeTap's case, Jeff's company, purchases minority equity stakes in residential real estate, and then they raise pools of private capital to fund those investments. What is the potential opportunity for blockchain in helping improve that process? Sorry,
you're going to have to start muting me in just a minute. So let me say this, because we've been in this space about 2.5 years, I guess. We probably did nothing the first 12 months, but go out and figure out, okay, the first misnomer, I think, with this space, and, I'm very pro tokenization of real estate. I think it's an amazing concept. Now, as we went out and started talking to people, it was like, okay, there's this magic board up here and this magic amount of money, and we're going to put our name up there, and a lot of money is going to come into this. I don't frankly see that happening all the time. So I think being realistic about, it's still, you have to still sell a good product and offer a good product and understand and explain the concept. But money's not just going to pour into this thing, and especially with the real estate. Now, the blockchain has a huge opportunity with real estate. I mean, you talk about fractionalization, but it's the back end that I don't think people are completely getting. And if I have a project, if I'm in something, tokenization, and Aaron was talking about this. Let's say I'm in a 5-year note and I want to, something comes up in life. I want to liquidate a bit of it. Well, tokenization gives you the opportunity, which is beautiful in real estate. So now I can say, okay, I have 100 units of this particular fund that's got real estate, and I want to move 20 of them. And after you've met your, mandates for securities of a 1-year hold, you can now do that kind of liquidity. So I think there's a great opportunity in that. And if you understand the back end and the front end, I do believe capital will come into a good company that's solid. It's got a good foundation. And that's the other part is, what we're seeing a lot is ideas come in, which is wonderful. You love to see companies come in that have expertise in the space first, that you can have confidence in and say, all right, that group knows what they're talking about. I understand them. I value them. I think they're good. And then the group has the ability to raise capital, show liquidity opportunity, and this flexibility and how you can come in and out of different investments in a much, much more efficient way. So
that helps a lot. Aaron, you got a lot of questions directly for Securitize, which is wonderful.
Love
so
it.
let me take a couple of them. So one of the questions from Cherry Huang is, could you discuss Securitize's partnership with Morgan Stanley? How do you view the future collaboration between CFI, DeFi, and maybe those questions are related, but if you can address that.
Absolutely. Yeah, no, we're thrilled back in June to announce our Series B with Morgan Stanley leading that. I think they're going to be they've already become a great partner of ours. We think that we may be the first blockchain technology company that their fund has partnered with that I'm aware of. And, Pedro, who's the head of the fund, will be on our board. And what's great about this is that, we've got that traditional finances we're trying to sort through. And I think we're doing a really great job on the regulatory front. Pedro's been through a lot of this, and he's been able to kind of just be a great consultant for us as we're navigating from kind of the digital world and its intersecting kind of the traditional finance. He's been just a really great, Morgan Stanley's been a really great resource for us. So, it's been great that over the years we've been able to gather many licenses. We've got our license for regulatory transfer agency, broker dealer for private for cap raising, and now we have our ATS license that was approved last month. And so now we've got the end-to-end solution. But now that we have Morgan Stanley, we've got both the strategic support as well as the financial support to really scale this thing.
Tremendous. And then the part B of the question was, how do you view the future of collaboration between CFI and DeFi, which is, I think, a terrific question to actually lay to the entire panel. And by the way, I don't know what, Shari dropped off, so hopefully she'll come back in again because we don't want to miss her perspective. So, Aaron, back to you. Part B of the question, Trang, was just how do you view future of collaboration, CFI and DeFi? And we'll open it up to Dan and Corey as well.
Yeah, sure. No, I think Morgan Stanley, I love that they really got ahead of things and, decided to partner with us. But I think you will start to see a lot of these, bulge brackets follow suit. I know there's a lot of other people in the space. I know Credit Suisse is in the space, Fidelity, State Street. So, I think they're kind of doing a more organic approach, but I think you'll start to see a lot more collaboration because, we started off as a technology company, right? And so our founders, Carlos and Jamie, they've been kind of ahead of the curve on the technology for a long time, but they weren't ever working for a bulge bracket firm, right? So you've got kind of specialists in the technology and blockchain industry, and you've got bulge bracket lens and insight. And I think, who am I to say? Like it could be kind of difficult to grow it internally, but to be able to partner with people who understand the digital space, with people who, are well versed on the traditional ecosystem, I think a partnership is it's a smart way to move forward quickly.
Dan, talk about the whole CFI and DeFi wars and what's the crossover, what's the potential for opportunity, and maybe the other side of the coin is who's going to get hurt.
Actually, I myself, for the stack we deal with, we are following the whole CFI DeFi conversation as to who do we trust really to manage the funds for us. Very interestingly, right? And so for us right now, that for me personally too, I think it's a little early to say who's going to be hurt with that conversation, where things will end up. And for me, I myself am just as inquisitive as you are. I think somebody like Corey will be a much better perspective. I do have a split opinion of both these and how and whom do we really trust to manage the funds. That's where it starts for us, particularly being in the advisory space. But I think somebody like Corey would be a whole lot more suited for that conversation than I would be.
Okay, Corey, let's hear.
Thanks, Dan. Well, let's understand CFI and DeFi first, right? DeFi is decentralized, meaning it's open, it's moving. Centralized, meaning it's in a ring fence, if you will. So, CeFi is traditionally what the world operates off. We have a closed fence and you play within that specific market. DeFi says, no, let's open this thing up. Let's let it move from this to this to this to this to this. So inherently, there's pros and cons. I mean, DeFi is this phenomenal concept, which I love, because now I can work with this exchange, and then I can move over to this exchange as long as they can link them and you're compliant, and then I can move here. So you've got this fluidity that's moving around in DeFi. Now, the challenge with that is, how do you control it? And how do you monitor what's moving, and how do you track what's moving and keep control of those assets? So CeFi, I still think, is extremely important, because there are opportunities where you can put good products in a central place. You have access to them. You can control those. It may not have the mobility that DeFi does and the opportunity to go into different places, but I think CeFi is a great space still. And, we have a product that's coming out here pretty quick, actually, that's a hybrid. And, it starts out in the CeFi arena that you have to go through KYC and accredited investor, and you have a smart contract, so we can see it, we know where it is, and it's safe. Institutions can come in and feel good about it. Well, now can we link that to another like marketplace that, okay, now I've got, say geographically, we've got one in Switzerland, we've got one in the US, we have one in Brazil, and now you have the opportunity to move these things around. And I think the key for me is traceability, the smart contract. If you do this appropriately, the smart contract knows who owns that asset. It knows where it is. It knows when the trade happens. It can whitelist. It can do all kinds of things. We have cap tables that are real time. So there is a way to do it compliantly. I think DeFi has a phenomenal opportunity. I do think there needs to be more controls. I think companies need to work in a way that they can track and, being a little redundant, have transparency of where these assets lie. But what more could you ask for? I mean, if I can take this great asset and move it into different aspects, it's phenomenal. But I guess my opinion is they're coming in. I think it's a safe play to come into CeFi. And if I'm a traditional group, I mean, you got Nomura, SoftBank, Morgan Stanley, go down the list. They're all jumping in the space, and I think it's a safe play. Then you start to gravitate into DeFi as it gets a little more defined, and you have some more controls in place. And then we're back to utilities and securities, and how do we treat those and make sure that an investor is protected in that as well. So, I mean, I love them both. I think there's pros and cons to both. I am hugely bullish on DeFi, and I think it will vet itself out. And I think it has tremendous upside for companies, institutions, and individuals.
Great. Let's switch very quickly to sort of a couple of issues that I want to cover in the middle office, trade execution related, and then we very quickly going to talk about some post-trade issues as well. So Dan, you've obviously spent a whole career very involved, particularly in the trade execution part of the process, or servicing hundreds of companies that have built product on your platform, particularly in the middle office and for execution. You do a lot of work in the derivative space as well. Talk about any aspects of the blockchain that are particularly relevant in the trade execution part of the process, or the middle office in general.
Right. See, we spend a big chunk of our time thinking about how do you make that more effective, right? And we, like you mentioned, we process executions over 300 firms at this time, all the way from advice to banks to a lot of trading platforms. So particularly when you're dealing with derivatives like we do, the execution is so much more. There is a huge growth in derivatives markets, so execution becomes extremely crucial. See, the locations that we see blockchain actually having tremendous value, like we talk, is number one is the time to settlement, right? If a lot has been talked about that, the T+0, T+3, T+2 conversation. I'm not going to jump deep into that at this time because everybody knows what that is. But I think my comment on that is I think that'll change the way we currently how retail traders basically, attack the market, edge the market, play the market, participate, engage, collaborate, how you want to call it, right? That thing is going to change the landscape fundamentally. I still think the conversation is being mishad because it looks like the conversation is being had as though somebody wants to block that when nobody wants to block that. I think it's basically the way the market has evolved, right? So that's number one. So the other thing that I find tremendous value that I think that actually delays some of this back office stuff is AML kind of risk and risk management components. The key word is transparency. And I think I think the blockchain can do a lot of these trade verifications and AML kind of verifications and all this on the back office much more effectively. And I think there is quite a bit of innovation that's fundamentally possible right now. So much has been talked about the T+0, T+3, but I think that's the second area that we can tremendously go ahead and see the entire process. If you think about the execution stack, particularly when talking about retail, right? At the end, there is a customer, there is an advisor, there is a broker dealer like us, there is a clearing firm, there are market makers and exchanges sitting behind it, right? And all of us have a set of regulations we need to basically go and adhere to. And so centrally what happens is all of us maintain the same data sets and report and provide that for centralized management to the regulators all through the day, right? And so that creates a set of circular, almost irrelevant processes. And so I think if there is a way by which all these players, right, people are talking about what the future of clearing, maybe the conversation that needs to be had is, I think a ground up conversation of think of this as a process and not a set of firms, and then figure out a way to actually create transparency is quite a bit of innovation that's possible. So for me, the interests particularly are largely around transparency, right? And that is verification, AML, mostly around settlement time. That's a huge possibility. And lastly, and most importantly is, right, at the end of the day, I think if we can go ahead and communicate to the customer the benefits of these of the back office stack adopting blockchain, I think it's going to drive some part of this innovation much faster than it's happening right now. So those are my thoughts. I mean, particularly not to go into a lot of detail, but I think the option space will be the area that will actually deliver, that will benefit quite a bit. We tend to talk mostly around, people buying, fractional shares, tokens, and stock. But I think there's quite a bit of innovation that's possible, particularly when dealing with options and all the innovation that's occurring in that space. So, Shari, welcome back. We have a lot of shout outs here. Shari unfortunately lost internet at her house, but she's back on. So
I'm back.
We've got
about rabbits going all over the place behind me, so we're back.
Very happy to have you back. So Shari, we had a spirited discussion talking about CeFi, DeFi. We talked about trade execution. So let me just pass the mic back over to you. Any aspects of what Rialto is doing in the middle office in particular? We talked about the issuance and the pre-trade parts of the process, but when it gets to secondary liquidity, secondary trading of traditional products on the blockchain, but also net new products that the blockchain enables, fractional shares in assets that we didn't have access to in the past, secondary trading of those assets. Spend a few minutes talking about, from your perspective, what are you seeing that's interesting and exciting happening in that space?
Absolutely. I think from a fractional and new product perspective, enabling the secondary market, both Securities and Rialto have a secondary market. Both enabling that is going to not only allow the private markets to scale, but sort of have fluidity. I always pause when the terms liquidity are thrown around, especially in private markets, when you're dealing in issues that are smaller, just because this market looks a little bit more like a corporate bond market where there's lots of individual issuances. And so it's going to have different trading dynamics than an IBM. Obviously, clearly. But that doesn't mean that there's not the possibility, very different from the corporate bond market, because everything's digitized. There's a great ability and there's the opportunity to really wrap things, right? To be able to wrap different sleeves of products, to be able to offer different sleeves of products and slice them up in small denominations, that it's still cost effective to do that and offer them to groups that they wouldn't otherwise be able to be offered to. So that's where I think it's really interesting and a space that we're quite active in. And so I'm really, really interested to see how that continues to develop.
Great.
I would love to jump in with a purely shameless commercial, because on this topic, Securitized Markets actually launched our ATS on Tuesday. Digital securities. So we're very excited. I'm looking at the clock and I'm worried I'm running out of time before I have a
That's
chance.
all right. No, we have 2 minutes. Please take it out.
No, so just, I agree with everything that Shari said. I hope I didn't interrupt you, but I was very enthusiastic. It's a fully automated experience with instant settlement that we were alluding to earlier. Shari and I are both used to seeing kind of, the markets very, very liquid in the traditional space. And I think she's right. I think fluidity is a nice way to use, a nice term to use what the market looks like at this point in time. But, yesterday was day 2. We traded 27,000 tokens for total value of $63,000, which evidently represents 30% of the securities trade reported yesterday. So, we're really excited about it. We've got about 400,000 existing, we call them securitized ID, which is our KYC, a portable KYC product that we have that you can log into our ATS and then, trade from there. But it's 100% paperless experience, automated, accessible to retail and accredited investors, supports 200 plus countries. And we're right now we're classic hours 9:30 to 4, but we'll be actually working towards, I think, 23 and a half by 7 days a week. So we're really excited. Thank you for letting me get that in.
Of course. Well, we could go on for another hour, but we've got 3 minutes. So let me start off with Dan. Dan, take a minute and leave one last. What's the one thing you want people to walk away from this discussion today to keep in mind as they sort of, as you wrap up the session? One thing to watch.
I think enabled by the blockchain, over the next 24 months, we are going to see tremendous improvements, particularly around settlement, particularly around transparency, both for regulators and for people who actually are engaging in both what I call as traditional securities and also the new security kind types. I think you're going to see settlement times improve, and you'll actually see greater participation and efficiency coming to the user experience that the people who are engaging in this in trading of these assets in the next 24 months.
Great. Corey, one thing audience should walk away from, one message you want to leave them related to this discussion.
Yeah, I think coming in with realistic expectations. This is a phenomenal opportunity. It's an emerging market. It's got a ways to go. And understand you're going to have to navigate. You're going to have to pivot some things. The better partners you have, like this panel right here, phenomenal group to participate in. From an investment standpoint, we want to invest in custodians and, the regulation, the groups that understand and protect. So I would just say, get involved, start, and have realistic expectations. It's going to take some time. We hear about these billion-dollar valuations every week. Well, those are rare. Those are not happening every single day, but they are coming and they will come, and we hope to be part of it.
Awesome. Shari, last word to you.
Absolutely. This space is definitely going to grow and be transformative. It will also be regulated. So I'm going to leave you with that thought.
Great. Erin, 30 seconds.
Oh, no, Shari did a great job. This has been a pleasure with all of you. I think this is definitely an honor to work with all of you and to be part of this panel. I'm looking forward to seeing what this space continues to do and to provide solutions for not just issuers, but also for retail and accredited investors to be able to access the private and digital markets.
Terrific. Well, on behalf of Rosenblatt Securities and me, thank you, Dan Raju from Tradier, Erin Sheehan from Securitize, Shari Noonan from Rialto Markets. Sorry, I got there for a second. And Corey Pugh from Bridge Tower Capital. Signing off. A recording of this is going to be available very soon. And thanks a lot for joining us.
Thanks, Dee.
Thank you. Bye, Dee.